Officially, good morning, everybody. Happy Sunday. Full of emotion and bias, Bob Rowland said. Love it. Welcome to the Options Income Launchpad, Sunday Market Insights. As you're noticing, we're in the midst of a branding shift, shifting away from Market Watch into Options Income Launchpad. This is our Sunday Market Insights session. My name is Scott. I will be your host. As always, please keep in mind what we do is for education and illustrative purposes only. Nothing that we do or say should be intended or construed as a recommendation to buy or sell any security or financial product. We're not brokers. We're not advisors. Decisions made should be based and considered at your own risk. Yada, yada, yada. Oops. Hi, Sandy. Good morning to you. What are we going to do today? Market posture. Our 6-component market evaluation process that allows us to have a sense of the underlying market fundamentals with a strong focus on institutional money. That's big money. Remember that institutions are 90% of the market. So they're the Titanic as they turn, which tends to be slow. They are creating the opportunities for us. We'll look at the economic calendar to see what news we have coming up. We just finished with a relatively important inflation report this past week, the PCE report. And now we're moving on to, again, pretty important week with jobs. Now we move into employment. We know that the Fed has reduced its focus on inflation from its two-sided coin of core objectives, and said even though inflation has been ticking up, and it did tick up, it didn't tick up at a faster rate than expected, it ticked up at the faster rate expected. Some recent and abrupt weakness in the labor market is certainly causing the Fed to reevaluate, which led to cuts in September and expectation of cuts in October, late October, and mid-December, the last 2 meetings of the year. So does that continue? That's what we're thinking about. Does that continue? And certainly this week's labor information is going to be paramount. This is the last information the Fed gets well, no, that's not true. We do get weekly jobless claims, but the big numbers, this is the last one before the next Fed meeting. After we go through sector rotation, we'll decide are there any sectors that need searching or that need more searching. As we go through and look at our watch list, we'll see if there's any maintenance necessary and start developing our next week opportunity list. What are the stocks that we think are most likely to give signals as we get to early next week? And I think there's some great candidates in there. I'm excited about what I saw. Lastly, we're already more than halfway through our next round of trading plan development. That's why I think it's easy to get complacent with it, but I hope that you're developing a habit in your trading plan development. An hour a week. 1 hour a week, and you will be working on the strongest trading plan you could have imagined. This week, we're working on Section 5, and we'll go through it together, which is routines. What do you do before market open? What do you do during market hours? What do you do in the afternoon or evening to process and prepare for the next day? What do you do on Sundays like we do now? A good amount of my weekend routine, my weekly routine, is what we're doing right now. We're doing it together. All right, let's get going. Let's get going. Oh, come on. I hate when it does that. Please tell me you're still working. Okay. I tested. It works. I go through my intro. I come back, and it has we ran into a problem, and then I have to relog. You guys know how Thinkorswim can be. It's a little finicky on Sunday mornings. Little finicky. Seems to be okay. Let's go. Now, hopefully, if you're relatively new or brand new, like Kent, you take a little time to go through our new member tour, where it kind of walks you through. Here's the schedule. Here's the courses. Here's some resources for you. And when you get there, you go to the resources and you can download a blank trading plan. And you can download a sample trading plan that's filled out. That gives you some guidance. You can download a blank market posture form, and then you can download a filled out one. So you can actually take all 2.5 years of our market posture data. And that way, if you ever wanted to go back in time and be like, hey, you know what did it look like when this thing dropped back in February, March, and then bottomed and then reversed in April? What happens to the posture score in a time like that? So you can have a sense. And what does it mean for us to have a 5 1/4? Is that good? Well, if you go back and look that we're never really above about a 7, that's about as good as it gets. Then you're like, hey, 5 1/4 is a pretty solid score. So helps to provide some context. Okay, but for now, here is, I forgot to do a prediction on Friday. How did I let that happen? Did I do a prediction on Friday and I just didn't write it down? I don't think I did. All right, I'm going to put a question mark there so I know that I dropped the ball. Okay, but we've been pretty steady. We dropped down back into the 4s for about 3 weeks. Dropped to 4.5, stayed at 4.5, inched a little higher, and then we popped into the 5s again, and that's where we've been 4 straight weeks at 5 1/4. Like, this is a 5 1/4 market. That's how it's felt. That's how it's traded. It's good. It's not great. There's still some chop around, right? We can't just be like, we should expect all our trades to just work out neat and tidy. Of course not. We don't come with those kinds of expectations in this market, any market. But let's go through what we have, what we see. And please, not just new, but anyone, if you have a question, a comment, make sure we're dialoguing, that I'm not standing up here monologuing. You know the drill. Okay, let's get back to a 3-year weekly. So we dojied. We had 3 weeks in a row of pretty good, and then we dojied. We did not make it up to that line. That upper red line there, that's where I needed it to go for me to raise my score to 1.5. 1.5 is this back here. This blue green. When we were in this area, we were a 1.5. And then as it sort of came out of that, let me get my drawing tools, you guys. You can see through here, we were already starting to diminish our score. Late in 2025, early 2026, well before this drop came, we had already started turning sideways through here, which means that by the time we got to that drop, our score had already pulled back. There wasn't like oh my God, what just happened? We see things when we're willing to look, when we're willing to make the attempt to get in front of the market consistently, we're going to see signs that tell us something's developing. That's what we're looking for now. Do we see those signs? No, not right now. We don't have a great trend. Did you come too late? Too late for what? You're right on time for you. All we did was just barely get going here. This is tough because if you look at this, you might think, hey, that actually looks at it's like a steeper angle than over here. But it hasn't really shown any consolidation more than just like these one little blips. Never late for Steve D. Tony said exactly. So no, I'm keeping my score as is because I'm curious. Are we going to pull back? And when we do, what does it ultimately become? Where we're like, this is what I see. And you'll notice if that's what it becomes, that's not as steep. It's not as steep. So it's been a little tough. We need consolidations, right? For us to be able to say, okay, what does that tell us about the sellers when we get a consolidative period? What information is that giving us about the sellers? Okay, so 1.25 prevails. Let's go talk about the short term. Anyone have a different? Did anybody raise theirs? Is anybody at a 1.5 yet? Or is anybody not to even 2? It is pretty strong. Oh, did I just... Holding at 1.5. Okay, so Steven is at a 1.5. He says he likes it enough to put it there. That's fine. If anything, I would say it's a 1.5 more than it's a 1. Based on the strength that we've seen. Oh, and now I think I did... Now it just told me my session expired. Oh, you son of a gun. You son of a gun, Thinkorswim. That one doesn't have my lines. I can't use that one. Give me a second. We're going to let that load. So we did get long-term in. We're going to jump down here to major market. We'll come back to short-term and volume. We will not be deterred. Okay, major market. TOS. You bastard. Okay. TOS. No. Not TOS. Major market analysis. What do we have here? The Dow, the NASDAQ, the Russell, the S&P. What are we looking for? Appetite for risk. Appetite for risk. If the market's appetite for risk is higher, it wants to get into more aggressive things. Small caps, technology. It's looking for risk. If the appetite for risk is lower, it's looking for safety. Safety. It's under maintenance. That wasn't very long, though. I might actually just jump right back in, to be fair. Let's see how long this takes after I type in my password. Sometimes it takes a while to get set up. Well, what do we see? We see the NASDAQ at the top just leading like it should. Technology, strength. We see the S&P, that's our watermark. That's the balanced index. It's somewhere in the middle. And then on this time frame, we have the battle for third between small caps and large caps. And you can see that the Dow was slow and steady. And they've had a pretty big surge from the Russell. However, even with that surge, it's still in last place. So when we first start this, we're like, I don't know. Then we drop it to the next time frame. We can't ever understand rotation or appetite for risk. From one time frame, we use 4 time frames. So we go to 133. And you can see on 133, the Russell went from last place and it jumped into still second place. Barely, Barely. It did have a pullback, but it is still in second place. Big jump. The beginnings of it moving into that leadership position. Then we jump down to 66 days and we see not just a leading position, but a front runner leading position. So when we just look at the last 3 months, which is most representative of current momentum in the market, what do we see? We see small caps leading the way, and clearly that's representative of the market positioning around expectations for Fed cuts, right? Expectations for Fed cuts. Okay. I mean, that looks good. That looks good. That looks like what we are hoping for. That indicates a high appetite for risk. It's pumpkin spice latte time if you haven't had yours yet. I'm not really that kind. But I know a lot of people like pumpkin spice in the fall. Okay. Where's my score? So last week I took it to a 1. Last week I took it to a 1 because that was the first time on the 133 that we saw the small caps move into that leading position. This week, more of the same, right? This week, more of the same. And so for me, yeah, the 1 is good. Let's go take a look at the road ahead. Press is here. Press, good to see you, my friend. Sipping on his morning coffee. Love it. Love it. A little bit of a pullback on this last little bit. Overall, though, still in a leading position. Right? There's not enough for me to change. Once I move it in, unless I see it drop out, I'm going to leave it at that 1. That's the score for now. For me, that's the score. Okay. Okay, what else? Let's keep going. Let's see. Steven held at a 1. Steve C held at a 1. Press said 1. Yeah, I agree. Good appetite for risk being shown in this scenario. Let's go back. I'm gonna go back a step. We'll go back to the SPY. Okay. Back to the SPY. And what's our trend score here? We're working off of I know we're jumping around. I'm jumping back up now. So this one is unchanged. This one is unchanged. Let's look at our short-term score here. And I got to tell you, I don't see any reason to change it either. I'm gonna change my lines to straight lines so I can draw this better. But as I look at this, kind of feels like this is our current short-term trend. It's a good, solid short-term trend. Right? It's not too strong, but it's a good, well-moving trend. No complaints. Holding at 1.25. Stephen D says, yeah, I mean, it hasn't accelerated. We'd love to see it start to go a little faster. It hasn't really accelerated, but it also is just sort of moving at that steady rate. We had a little bit of a pullback last week, and then right at the end, it held and turned back up. I don't think we had volume. I'll go see. But yeah, this looks fine. So let's go back in. 1.25 holds. This is good. Let's go look at our volume. The volume is where there could be something happening. It's interesting because we average around 20 to 22 days on this 1 month chart. Give me a second. I'm going to make the scale a little better. Let's take the time expansion to 7 days only. That opens it up a little bit for us. Hi, Vladimir. Good to see you. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So like I said, 20 to 22 days. We've got 21 days. 21 days, and of those 21 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Half of them are above average days. Right? Half of them are above average days, which is interesting. But we've got this chunk back here. The last week, we never really give a lot. We tend to discount those. We've got 2 sells and a buy. So more selling pressure than buying is getting stale. It drops off this week. This is going to be gone, and it's going to leave us with this. I'm gonna toss it. I'm gonna toss the stale data, which leaves us with a tie, 5 ties in a row. Then we had a buy day, then a sell day, and then a tie. Turn back up. So as I look at this, I'm thinking to myself, we had 1 sell, 1 buy, 6 ties. That's a lot. 6 ties, which is a overall tie. And as Bob Rowland just said, tie goes to the buyers. That is a rule of thumb here, which means we score this 0.25. In order for us to have a 0, we would need to see a little bit of an outweigh towards sellers, which we don't have. In order for us to go negative, we would really need to see the sellers sort of taking control, which we definitely don't see. So, let me know if you have any questions about that. All right. Why did you score the last volume as a tie? Would this not be a sell day? This one here? Because it was only minus 0.47%, if I remember correctly. So if we take I'm going to need a calculator, but not that big. Whoops. Great question, and this will be helpful for anyone who's new. If we take the close here, 661.10 minus the close here, 658.05. That was $3.05 divided back into, so remember this is relative to this day. So we say, how much have we dropped relative to the previous day? So then we divide this back into the close of the previous day. Now, I was watching it, and that's why I know. I think I'm going to be right, but let's see. 661.10. And the answer is 0.46%. 0.46%. I thought it was 0.47. Maybe it was only 0.46. Either way, it wasn't 0.5 or higher. It was close. And we've had several close. Right? This one was close. This one was close. We've had a few close calls, but we if it doesn't get there, if it doesn't get above a 0.5, which this one was not, then we mark it a tie. So I marked it a tie. Let me know if you have questions about that. And as such, my score will stay the same. With all these ties, what can we conclude on the macro level? God, what's funny, Press? I can't think of a time in the last decade where I remember there's an overwhelming amount. There's definitely more volume than not. But when you look and we say, hey, we're going to mark this a 0.25, and we say, well, here's the start and here's the end. What's the direction of the line? Boom. You'll notice we actually have this half is a little bit below the line. This half is a little bit above the line. That's a great line. That's an upsloping line. Overall, more buyers than sellers still seem to be the prevalent here. I think it could mean maybe kinetic energy. If I had to take a stab at it, I would say it feels like the market's sort of building expectations for something, but it just can't decide which direction yet. As such, we go with prevailing directions, and the prevailing direction is more bullish than bearish. My final score here then is unchanged at 1.25. I want you to notice how steady this has been. We have not changed our long-term, our short-term, or our volume for 5 weeks. We dropped our long-term from 7 weeks ago. We raised our volume from 7 weeks ago. So even longer than that, this has been pretty steady, right? This has been pretty steady for a couple of months now. It maybe hasn't felt like it, but it's actually been a fairly stable market as far as the broad perspective. There's certainly chop still that we suffer through to some extent, but yeah, there you go. Okay, we already did major market. Let's go look at sector rotation, finish with the VIX, see where that puts us for the week. I mean, so far so good, right? So who are the sectors leading? Where are institutions putting their money? They are definitely putting it into communication services. They are definitely putting it into technology. A little bit of a surge in utilities, which again, even when we see that surge in utilities, it's hard for us to discern if that's a defensive move or if that's just the fact that current growth industries are very energy intensive, right? When we think about crypto and how much crypto work, when we think about AI and all these server farms, all these companies are building AI requires a lot of processing. A lot of processing requires a lot of power. So utilities has taken on a different role, it seems, as we move into the age of AI and crypto. So, yeah, exactly, Press. Now, let's keep going. Let's drop down. Now, where's everybody else? Well, down here we have industrials, and here we have financials. Very, very close. On the 200-day perspective, the only growth sector that's not in the mix is discretionary. But as soon as we move down to 133, where we're closer to just the end before and the bottom here, what do we notice? Discretionary has moved into a leading position starting at the 133 day. Now we have technology, we have communication services, and we have energy. Those are our three leading at the 133. Industrials is a little behind. Financial is a little more behind that. Utility seems to be making a run into, but hasn't got there yet. And then everybody else, all our other defensives and inflationary type reads are all down here in the lower range. When we go to 66, this is where we're going to score it. What do we have? Oh, we wondered if we would see. Oh, that's energy. I misread the blue color. I was like, wait, who's that? Energy making a move into the upper level is not really growth oriented, more inflationary oriented. Remember that energy costs are about 30% of inflationary calculations. So we don't want to see, when we're already in a heightened state for inflation, we don't want to see energy shooting up into the top. That's for sure. Though, as we've been saying, it seems that the Fed is to some extent ignoring or paying less attention to the inflationary data. But we were hoping to see a third growth segment move in there. When we see energy popping a little bit, we see utilities popping. It's popping, but it hasn't got into a leading position. Even energy kind of got to the market. Remember, this is the S&P. It got to, but not really above by, I mean, it's a fraction. This one almost got there, but didn't. We're still missing industrials. We're still missing financials. In order for us to raise our score from where it is now, I'm at a 0.5. I'm at a 0.5. That means I've got 3 out of 5 growth sectors leading the market. If I want to get to a 0.75, I need a fourth. If I want to get to that 1 score, I need all 5 growth industry or growth sector pistons firing. And I don't have that. I have 3. So my score is going to stay the same. It's good. It's not great. It's sustainable. Can technology, communication services, and consumer discretionary carry the market for a bit? Absolutely. And now let's go to the 22 to see the road ahead. What's coming? Press said. A great idea. What do we have here? We still have communication services at the top. Technology right behind. Always good. Always good to see the leaders still leading, even on that time frame. But then we see energy coming next. We see communication, or we see consumer discretionary fighting to stay. So if anything, it shows a little bit of a not weakness, but a little bit of an ebb in its strength. We see a surge in utilities. Utilities is starting to push a little bit. So what should we do? You guys know I don't love individual utility companies. I'm fine just, maybe we put XLU. That's the energy ETF that XLU is the utilities ETF. Maybe we start to give that a closer look day to day to see if there's a trade there. Financials, not really surging on the 22. We're not seeing it. Anecdotally, as you look at our watch list, we have some great financials companies. The problem is that's not necessarily representative of group. In fact, when we go through, we'll be like, man, our financials look great. We would have expected, I even made the comment, maybe the strength that we're seeing is going to fold into the overall sector. It's a big sector. One of the biggest. Technology and financials are the biggest. It's a big sector. There's a lot in there. It just hasn't materialized yet. So while we do have strong companies that we're watching from the financial sector, there's not enough there for us to think it's overall group momentum. Okay, so my score stays the same. And now let's move on to the VIX. So really nothing's changed actually here. I wonder if I did actually score this and I said 5.5. I thought that VIX was possibly going to go up. Let's go see. Let's take this back. Let's pull up the VIX. And what do we see from the VIX? Now, if you remember, our score on the VIX had dropped recently because we had this low and this high, and then we broke this high, so we lost a quarter of a point here. That's a minus 0.25. Then it pulled back and it bounced at a higher low, not by a lot, but we don't like, oh, well, it's only 0.17. So no, it's a higher low. So it lost a quarter of a point here. So our VIX prior to that had worked hard to get back to a 1.5. We were down in the teens, 14, 15, fabulous. Our concern was this could be building to an escalation. Now, I didn't score this or this as a high or a low because it never really, you'll notice it actually just sort of floated right through here. It started higher but ended down. It started lower but ended up. So it never really turned for me. This is all one move here. Remember that the last high, I'm getting a lot of lines on here, so I'm going to change my color to blue. This was still the last high that got scored, which means this is the high, and I'm going to draw the highest point and the body point. And you'll notice that this was the highest part. It didn't get anywhere near up here. This was the bodies, which was making what? If it rolled over, then this became the high, which is lower than this. So this is a lower high for me. What does that mean? That means I'm going to raise my score, 0.25. Did anybody else raise theirs? And that was a pretty bold statement. Look at the size of that candle. Remember what's going on when we get this. What's driving the VIX? Institutional trading on S&P 500 index options. What do the institutions do with S&P 500 index options. They hedge. They don't speculate. They don't speculate on it. They hedge with it. They buy insurance. So if a lot of institutions are buying insurance, then it's rising. That's fear. That's why it's called a fear indicator. When it's rising, fear is rising. When it's dropping, what's happening? Well, they're all those insurance policies that they bought. What are they doing with them? Selling them, right? This is based on prices comparative to historical prices. Why would prices be going down on S&P 500 options? Because supply and demand. Prices are going up if demand is going up. Prices are going down if supply is going up. If people are like, oh, I'm going to sell these back to you, the market makers are like, oh, you are? Yeah, you're selling them back at a lower price, my friend. And they're lowering price, and that's what happened. Now, Steven said, I looked at the last candle as a higher low. Which last candle? Like Friday's candle? Or you're saying this candle here was a higher low? Remember that when we're talking highs and lows, we're talking peaks and troughs. So there's a reason why you'll see me draw these little V's and upside down V's. I need these things, right? I need these things. So that's why you can see this one is lower than this one, because that's the peak to peak. Now, if somebody put a peak over here, I'd be like, oh, okay. I didn't because of the way that they ended the day, but I wouldn't argue either. The problem with that is you went from one right to the other. It's like you went from a peak to the next day a trough. And that's why I said I'm excluding those. So there you go. So where do I end up? I'm raising my score 1/4 point. I'm deleting my lines. And, whoa, no, I do want you. And you are going to a 1.25. See, I swear I'm losing my voice or something. Okay, there I end up, 5.5. Very nice. As we said recently, if anything, our orientation around our posture has been leaning to a higher score than a lower score. There's often times when we're like, ooh, it feels like this thing could drop a little bit. God, I thought I was going fast, and I realized we're at 10 minutes before. Let's get to the watch list. Slightly more bullish. Let's go find some things to trade for this week. Where did everybody else end up? Are you higher than me? Is anybody at a 6 or higher? Is anybody in the 4s? That's what I'd like to know. 5.5 for Steve C. Love it. Love it. Like to be aligned. Okay, what are we looking to trade? Apple. Apple could flag. Apple could flag and become a trade. I'm going to put it on the list. It's looking bullish. We love to see Apple bullish, but I need a pull back on this. Archer Daniels, no, too sideways. We're not really looking for consumer cyclicals right now. Amazon. For me, Amazon's a little too low. I didn't like that it dropped through the 50 with volume. Look at this volume. Sellers, 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 sellers. It broke this low. It broke this low. It broke this low. Yeah, not for me on Amazon. ANET. Ooh, ANET we put on, started to move, paused. Seems like it's possibly on a hiccup here. I kept half of mine. I pared down, took a little loss, but kept some. If this gives us something like this, that actually is quite a strong move. And I would actually then duplicate this, move it over and say, now that's what I'm looking for with the other half. Would I put the other half back on? I would think about it, to be fair. I would think about it. But I feel like that is not lost hope. It never broke support. Never broke support. In fact, it tested support on a hammer day and held. Give me your thoughts on ANET. I'm still going to keep that as a bullish consideration. APH. APH is setting up, and I'm waiting for another trade on APH. Had a good one recently. This seems to be in a minor pullback, so could be something developing for us there. AVGO, I'm keeping on the list, but I got to tell you, as I've really dug into AVGO, I'm like, you know what? These moves back here are not fantastic. It's more of a grinder. It kind of tricks you into thinking because of this like earnings acceleration that it has more potential on bullish trades. I'm iffy on it, to be fair. I'm going to keep it on because it does look like a higher high followed by higher low setup. But yeah, I think there's some nuance to this. AXP, yes. Financials, small pullback is all we need. You can see the stochastics crossed back here. So for the last 4 days, we've kind of moved into the selling cycle, but the sellers haven't done much. What does that tell us? The sellers haven't done much. It means it's really easy for buyers to remain in control. Strength indeed. Same here. Strength. As I said, anecdotally, I look at financials like, oh, financials are great. Well, because we have some great financial companies on our watch list. That doesn't necessarily indicate that the sector is great. Sector's okay. Not even in a leading position. But we've got some pretty solid ones on our list. Citigroup, right? We just had a trade on Citi back here. Worked out quite well. And looks like it could be trying to turn already. So Citi, definitely on the list. Caterpillar, on the list. Industrials, also not great, but this is a great-looking stock. Great-looking stock, made a phenomenal move. Now it's in what? It's in its consolidation. Yeah, do I want to trade out of that? Absolutely. I want to look for that. CCJ, look at the chop. I'm not interested in all this chop. Big day up, big day down. Big day down, big day up. I mean, it's just, there's a lot there. Let's just watch, see. CLS, I think CLS is showing some possibilities. When it did gap down, it gapped almost to the old test of the gap, but it held. Still in this consolidation. I'm gonna keep CLS on the list. Capital One. Boom. Capital One looks not like just like it's on the list, but possibly turning into a buy. Coinbase. I'm gonna put Coinbase on. It was in this consolidation, busted out of it, got the new high, pulled back, not by much, but still a higher low. If this thing turns, yeah, that might be what it needs to try to ultimately fill this gap, make that move. Coinbase. Cisco. Yeah, Cisco just never developed. I took my loss. I don't love it. You know, you can't keep thinking it's going to move. It's gone sideways. Broke even with it. Mine was a small loss. I actually booked a little bit through here and then took the rest. So it wasn't bad. It wasn't like a full loss, but it's off the list. Now, all of a sudden, you look at it and you're like, it's really quite sideways. The thought back here was it busted out of this consolidation and then gave a higher low and thinking maybe it's going to make that run back to the old highs and get the cup, but it never materialized. What is the takeaway? Sometimes you eat the bear and sometimes the bear eats you. This is in a consolidation for me. I need it to bust out and then come back and then hold a higher low. And then we're in business, right? Then we're in business. DoorDash. Yeah, DoorDash is on the list. Looks pretty good. You know, it pushed and fought and got all the way back up here. Same kind of a thing out of this old consolidation. Now it's on its way back down, but the sellers haven't pushed it very much. I think there's something developing there. Diamonds look bullish. DocuSign. Oh, DocuSign has some momentum. It's got a strong trend here in the last little bit. Higher high, pull back, higher low if it turns. Now, if this just keeps selling off, then all bets are off and we stop watching it. But for now, still holding up. EA. The news here is that it's looking to go private. Just never, we were looking for it. Would have been amazing if it could have given us a signal prior to that news. Unfortunately, it did not. So if anyone got a piece of that, good on you. EXPE. EXPE actually gave a heavy signal, meaning it was, if you were watching it and you're like, I'm going to get in if it crosses the high of this last candle, then it would be a great position. But at the end of the day, it makes it a little harder. My thought is, if this thing can pull back in like doji, then it might give us still an opportunity. Now, here's the deal. Like, people are like, oh, I missed it. Did you? How many trades have we had give signals and then hiccup? Plenty. You never missed something. There are certainly times where we get a signal, you get in, and it just rides. And you're like, whoo, I'm glad I got in when I did. But there are also plenty of times when you get in thinking, all right, this is the start, and then it hiccups. So if this hiccups, it gives you a chance to take the trade. So don't just be like, that's it, I missed it. I'm not going to watch it ever again. I think there could be a trade there. So let's be looking. Ford. I don't know. Ford was just like grinding, and then all of a sudden just boom. So Futu. Oh, Futu. Futu gave a nice signal, started good, and then just, again, hiccuped. Did it break support? No. No, it didn't. If you're still holding, understandable. Okay. Fiber. Fiber was one that we looked at, gave a signal. This was a stock trade, if anything. The options were garbage. If you traded this, you traded it for the stock. Otherwise, nothing. I got to speed up, you guys. GE looks fantastic. Fantastic. Ready to go sometime this week. Gold, maybe setting up. Google, come on down. I am definitely looking for a trade on Google this week. I've had a couple of good trades on Google. I'm looking for another one. It's a leading sector. It's a leading stock. It's just made a new high. It's pulling back. Everything about that looks nice. Goldman, another financials that just made a new high. It's in a consolidative position. Hood, same thing. As I said, we've got some great looking financial stocks. Howmet, meh. I like GE and I like Caterpillar more. I'm going to stick with those for now. IBM, whatever their quantum nuclear flex capacitor technology is that they're putting out, they're came back. This is one that we talked about and a few people got in here. Didn't end up putting the alert out, but it was a great trade. It was a great trade. Intel, this is one I said, I just don't know if I want to trade into the news and whatever else. And man, played out well. Did not trade that one. IWM looks like it's setting up. Levi, put it on the list. We had a decent trade on Levi. Made a little bit of money on it. Now it's starting to pull back again. Great. Great. Opportunity developing. Lumentum. Lumentum, I would still say, is warranted on the list. Las Vegas Sands. No, I'm not. It could go. That's why I moved this, right? As we tried it, it sort of went through here. I think that could be a sneaky reversal. So actually, I'm going to change my mind. That's still a maybe for me. I think it could be a sneaky reversal. It's still in a good sector. Still holding. Still holding. Very nice. I think it could go. I might look to pick a little up still. LYV still setting up. That's a yes on a setup for me. Bouncing off the 50. Meta. I don't know. I don't love that it's holding the 50. Yeah, let's put it on, but I have a feeling if anything I'm going to go with Google if it comes. Morgan Stanley still strong, put it on the list. On a pullback. Microsoft, it's a little more iffy. Micron looks good. Got some momentum, pulling back. Netflix is a no. Northrop Grumman. We talked about this one. It was just kind of sitting here for a while, and then all of a sudden started to go. It's a good list. I like when I have 20 to 25 on the list. NVIDIA on the list. Put it on. I'm actually running out of room on my card, and that makes me happy. PGY. Yeah, we'll still put PGY. I'm going back to the top now. PLTR. Beautiful looking setup on PLTR. You know how much I love trading PLTR. The Qs look great. Roblox looks like it's trying to make a turn. That's a mover. If you look to the left, you can see that thing was like a freight train for a little while. Reddit we just took. Put it on the list. Reddit was on the alerts. Also, if you were a text person and you clicked on the link and you got blocked and sent me a request, I am so sorry. I have to unlock the link, and apparently I forgot to do that. I went back in. I know it was after the market. Psh, what a jerk. I'm sorry, you guys. That's on me. But it did get posted and it did get emailed with full details. But if you tried to go in through the text, it did not work. So I apologize for that. But yeah, it looks great. Pulls back. Gave us the turn. Everything about that was kind of in line with what we like to see. Rocket Lab, no. 2 sideways, silver. Way overextended. SoFi, definitely. I'm definitely looking there. In fact, I would say SoFi is one of my leading because it's pulling back. It's such a strong. I've been wanting to trade that one. Tesla's a no for me. TSM, absolutely viable. Put it on the list. Pulling back. Uber, kind of sideways, but if you're in a covered call type position, looks good. Upwork is trying. Upwork is setting up for something. I like it. Visa is a no. And let's finish with Walmart. I'm still going to put Walmart as a maybe. Walmart is a maybe. Okay, that's the list. We're 4 minutes over. I apologize. Let's real quickly take a look at our trading plan. We're talking about routines. We have daily, weekly, and then you also have monthly or quarterly, but the core focus is daily and weekly. For me, daily and weekly, I focus on before market open, during market hours, after market close. I have 3 different daily routines. I haven't seen it, Steven, but I'll look for it. Thank you for flagging that for me. 3 different daily routines. What do you do? I need to actually flesh this out a little more. I thought I had. I don't know why that's not there. I'll try to do that and upload a new plan. How about that? So, define it, create a checklist. Nothing ever gets missed. That's the objective for routines. We are what we repeatedly do. Excellence, therefore, is a habit. That's what routines is all about. Look at that. Covered it in 1 minute, only 5 minutes over. It's great to see everybody. Feeling pretty good. Market's holding up. Whatever else you're hearing, thinking, feeling, let's put it aside. What do you see? There's plenty of opportunity for us this week. If we get some decent job numbers, and that's what we're looking for. If we get great job numbers, the market might actually see good as bad. Decent job numbers will allow the Fed to still give us that interest rate cut. So, all right. Thanks, everyone. Great to see you. Have a great rest, and I'll see you tomorrow morning as we transition from market posture to trading posture. As always, happy trading.
This is a reminder. Water the bonsai.
And don't forget to water your bonsai.